Hello and welcome to our weekly overview of the global markets section 2. So without further ado, let's begin with the Swiss market. Prices are still correcting the recent rally. As discussed in our last week's video, prices in Switzerland registered a temporary high near 13,006 and a small downside correction is now underway. We look for support near either 12,069 or the upper trend line of the base channel, which currently comes in at about 11,835. Once this correction ends, prices should resume higher in intermediate wave 3 towards our target near 14,248, the 1.618 multiple of wave 1. This will be our focus for the first half of 2022. Next up is Spain. The downward sloping trend line near 91.25 remains strong resistance near term. We favor this trend line breaking as prices are likely tracing out an initial 5 waves up for wave 1. As we discussed in our last week's video, we believe that Spain completed a long-term bear market in cycle wave 4 and we are currently turning higher in wave 5, wave 1 of which is in its very early stages. Once trendline resistance is overcome, we expect primary wave 5 1 to target the 78.6 retracement of cycle wave 4. This trendline should then act as support on any pullbacks. Now let's continue with Hong Kong. Our working assumption here is that prices are completing a long-term bullish triangle for cycle wave 4. And we are currently now starting to get some upside acceleration. Key levels to watch near term is 26,221, followed by 30,000, which is the BD trendline of the triangle. We look for a break above these levels into the new year to establish that wave 4 is complete and a long-term bull market in wave 5 is in its early stages. And now let's jump to Australia. Here, prices are not quite following our script as we are currently approaching a key support level near 79. If prices break below this level, we may have to assume that primary wave 4 is likely still in progress, tracing out either a larger flat or triangle. This would result in further sideways to down price activity in Q1 and possibly Q2 before wave 4 is over. Either way, though, we ultimately expect a rally to new highs in primary wave 5. Just to add, until this level is broken, we are slightly leaning to the upside in wave 5. However, if we break below this level, we will then have to roll to a still developing wave 4 correction as previously discussed. Next up is India and the Nifty 50 index. Despite the small downtick, we overall remain bullish as we look for intermediate wave 3 to travel towards the 1.618 multiple near 23,615 into the new year. The prior low near 16,445 should be strong support if tested. Next up is Tokyo. Prices here remain in corrective mode, and we will likely see a test of structural support near term into the 1885 to 1849 area before the next leg up in primary wave 3 gets underway. A strong near term obstacle is the upper trend line of the 1-2 base channel, which comes in near 2120. Once this trend line is overcome, prices should gain upside traction. The 1.618 multiple of wave 1 near 2821 remains a strong upside target for the new year. And now let's jump to Taiwan. The focus here remains higher in wave 5 of 3 despite the recent downtick. Key support for this bullish view is the prior low near 16,169, although we prefer to see support and overall demand near 17,198. The Fibonacci cluster into the 22,676 to 23,394 area remains our target for 2022. And finally, let's take a look at South Korea. The focus here remains lower in intermediate wave 2. Our preferred trajectory is a low near the upper trend line, the wave 1 high near 2610 and the 38.2% retracement of wave 1 at 2598. Near near this zone, we look for wave 2 to bottom out and then give way to a rally in intermediate wave 3 in 2022. The wave 1 high, however, is formidable resistance short term. Once overcome, prices in intermediate wave 3 should gain upside traction. This concludes our weekly wrap up for the second section. Have a nice weekend, and I'll see you in the next video.